There's a G in fridge and not in refrigerator.
Excellent. Look forward to hearing the answer.
I'm quite looking forward. I think this might be a good feature. I've got to do the homework and find a reason. Right, we are live on YouTube. Welcome to the show, guys. We are live on YouTube for the first show of the day. First show of the day. What am I talking about? Of course, it's the first show of the day. It's also the first show of the week.
The week, that's the one.
Just getting used to everything here, mate.
That's the chart that's got the bigger time frames on it,
mate. Yeah. Well, this is where we are right now. Just a quick rundown with the FTSE. I don't actually. I'm not looking for much movement today, if I'm honest. I think the FTSE is probably in a little bit of wishy-washy mode. We can see that there are some levels up here that so far it's been just unable to get through. Looks like a potential little trend line has been broken down. Really on the 15-minute chart, I think we see it a bit more clearly here. Just down there, and it may well have also created this lower high here as well, but the daily pivot is currently holding up. I did notice this. I was up quite late last night and I noticed that on the UK cash there was a little bounce in this area, and obviously it's filtered through to the in fact it was here. I was watching it. So a little bounce, but we have had a break of that level now and a little bounce there as well. A difficult pattern up here to kind of ascertain. So the patterns are a little bit sloppy. Of course, I'm still looking for the shorts, and I have got. I'm a bit stacked up with some shorts in the market, but got to protect those shorts with some longs. Good day, Kumar. Hello, Sui. How's everybody this morning? Hope you're really good. So we are still looking for an easing to the downside, but the market is pretty resilient and it continues to be so. So what we're probably going to look for is a drift down to here again. If we can get down at 100 pips or so into this area and maybe even lower, if the trend line kind of starts to meet, then we're probably better off and safer continuing to look for the longs. But this is obviously not a long area. We are in a sell zone here, if you like, and any pop up to this area will encourage me to maybe even add some more selling positions. But if it does come down, then we're going to have to consider the long, because I don't really see the reason for us to break down today. We've had a little bit of weakness in the US market this morning in the US futures. We've got pretty positive price action in the European space. The Asian session was a little bit flip-flop and couldn't really decide where it was going to go. It's just the what's going to make this market tank, and it doesn't seem to be there right now. We know that there are terrible numbers probably still to come, and maybe that's what's going to drive us lower. I'm watching very closely the rhetoric between the US and China. Now, China haven't really responded from Donald Trump's intimation that this could well be a purpose-made pandemic. Whether it was an accident that it escaped is another question. Morning, Fad, but we certainly do have. And good morning, Andrew. Yeah, so we're probably waiting on some tension probably to raise a little bit further. That may well be the catalyst, but I don't know. This is the thing. I don't know what the catalyst is going to be. I don't believe the value of the stock market is currently there. There is a lot of liquidity in the system, and more came from China yesterday. There's a lot of aid. So the federal bank and all central banks really across the globe are doing everything they can to make sure that there can be a rally that is sustained. So the issue with that really is if there is a slight glitch in the harmony of the market, that's what could bring it down. It doesn't appear that it's going to be anything that the banks are doing. It looks like they're going to do everything that they can to make sure that stock markets remain high. I even heard about the Fed potentially going into equities now as well. So there is every reason to suggest that the stock market will remain buoyant as long as there's no political unrest.
So now we've got the bookmakers gambling. Wow.
Yes, yeah, exactly, mate. Yeah, absolutely. Yeah, and
Mm.
isn't that interesting? Yeah, but we know what we
That's
know what.
more than interesting. That's unbelievable.
Yeah, yeah, yeah. I mean, this is just something that I've only heard 5 minutes
Strange
ago, so
times
I haven't
indeed.
not read into that story, mate. So we'll have to see if we can
No,
get that a bit more detail. Good morning, Helen. We'll have to get a bit more detail on that, but we'll see what goes on there. But I was that's what I'm wondering though. Is there going to be some sort of political um, disharmony that brings this market down? Because it doesn't appear to be. It's not appearing to be done by what is fundamental. But then I suppose the fundamentals are being skewed just purely by stimulus, and the market is surviving really right now on paper foundations. Will it be enough? I don't know. But what the Fed need, what all these central banks need, is for the companies to eventually start turning around so they can reduce their stimulus. I just don't see how that can happen when the whole world is in lockdown. You know, I know we're starting to go back to work. It appears it's way too early. There is a vaccination on its way, and the more time passes, the more reports of the likes of Gilead and some other companies. There's a company in Oxford actually in the UK that believe that they've got a vaccination that they were working on pre-corona that could be it could be out in autumn. Well, a lot of damage can be done between now and autumn. So, is there enough stimulus to make sure that we can remain buoyant until autumn, or will the Fed and central banks just continue to throw money and everything they can, or have they spent a lot of their tools already? You know, where does this leave us? They seem to have reacted very, very swiftly in this particular incident. And if it was if it was a financial crisis, I think fine. But we just don't seem. Good morning, Lewis. But we just don't seem to be in that particular position. This is a health issue, and people aren't people aren't uh, um, that people's lives aren't the same as they were. You know that there are certainly the
no,
airline
money can't
companies.
solve it. Money can solve
I
financial
don't think
issues,
so, mate.
but money can't solve medical issues.
No, I don't think so. So I'm still looking for the shorts, and as you know, I'm short in a few areas. I'm also short in this area up here, but if we're going to go short again with any confidence, I really want to see the high. But as it comes down, I think we're going to have to be aware that we may well have to protect these shorts and take a few longs in the market as well. So that's what I'm looking at right now, mate. Like the fact that it's easing to the downside, but I don't suspect we're going to really fire down a big sustained move down. I just don't see what the catalyst is right now. So let's pass to you, mate. We're going to get the pound trade on.
Yes, I've already done that. So
Oh,
I'll give
okay.
you the parameters around that,
All right, let me pass to
and
you.
we'll share that with everyone. Okie dokie. All right, usual stuff, guys. It is 10 pips below the low of the range of the last 3 bars prior to London Open. And this case today is indeed 3 bars. So the high of the third last bar, which is there, and the low of the last bar prior to London Open, 1 hour chart. And the entry today for the short is 124, forgotten already. Below that bar, 124.33, and the stop loss for that is at 125, and simply reverse the pair. The buy order is at 125, and the stop loss for the buy order is at 124.33. And of course, as usual, if you get triggered into one of those, or when you get triggered into one of those, cancel the other. So if you get triggered short, cancel the long. If you get triggered long, cancel the short, and go from there. Boy, oh boy, this looks like the word I'm looking for is consolidation day. It looks to me like we are in a sideways situation. And even the entry and the stop loss look like a box range, don't they? So, you know, it's pretty clear to me that we are in a box, and we've got pivots very close together, daily and weekly. Would not surprise me one a little bit if that's where we stay for the remainder of the day. Now, that said, I think we're very, very similar to that on just about everything that I'm looking at. The major structures that I've been looking at are very much mid-range or middle of nowhere. So we're not near the top, we're not near the bottom, and we're in a situation where what's next? Question mark, question mark. So what I've done, I'll go through the 4 pairs that we are still in, which are euro dollar. Euro dollar, we entered here. This is a different chart, of course, because I've been using my analysis charts through the US session, and therefore I just gave a little taste of that last week. But this week we're back to the majors only. I've probably got a couple here that I'll comment on that have come to my attention, but this one, euro dollar, is certainly a part of the majors, and we traded this last week as a false break of this trade line. Not only that, double cross of the weekly pivot, and there was something else going on there at the same time. I can't remember what that was, to be fair. Pretty much at entry, and we've kind of been up and about and roundabout and all the rest of it, entry for pretty much the longest time. Not long after we placed that order, 3-4 candles after we placed the order, and we've just been hovering at that point ever since. I think whilst ever we're below the trend line that's been broken, below the weekly pivot, we'll hang on to this, but I think a close above here would necessitate a reassessment on that. And probably for me, that would mean closing in a losing position. So we're bang on entry at the moment. If you are in this trade and have had enough of it, I would totally understand you getting out at this break-even point. It is not the worst thing to do under these circumstances, because we really just haven't got a TP1. Look, TP1 is always an interesting scenario, but to me the obvious TP1 was down in these areas here, and I think it was 60 pips from memory. I haven't got my other chart open, so I can't remember what TP1 was. I think I'd be prepared now, if we got down to these lows, to amend my TP1 to that area. So that would look like maybe 108.20, say, just above DS1 there, 108.20. I think that would be sufficient to take the first profit and get something off the table, because this is in, as I say, like a lot of the things that I've been looking at, in no man's land. What's no man's land look like, I hear you ask? It looks like that. Like I said, we've bounced off the bottom, we've bounced off the top, and now we've got absolutely no idea what's happening next. On the balance of, okay, the last time we visited a boundary was the top side. That gave me a bias short, but gee whiz, I think we've hung around here long enough now to understand that there is really nothing going on here, and the market's got no idea what's going to happen next. It's waiting for something. What that something is a very, very good question. And to be absolutely honest with you, I haven't had a look at Forex Factory yet, so I don't know what is coming up this week. We'll probably have a look at that in the next little bit, but no man's land looks like this. You're not anywhere near the high, you're not anywhere near the low, you're absolutely in the middle of that. So we're still in euro dollar. As I say, I've adjusted my TP1, and I've also had a look at where my stop loss is. It's okay for the moment. Dollar yen, we're still in dollar yen. I have moved my stop loss on dollar yen down to just above the swings here. Reason for that is exactly the same as I've just discussed. On the bigger picture, we are absolutely bang in the middle of this range. Again, very similar picture to what I've just shown you. The last time we bounced was off the top of this range, and now we've just congregated here in the middle. It's like a little powwow or a picnic or something like that. We've decided that this is enough. We don't know what to do now, and we're waiting for a lead, whatever that lead may be. Again, got absolutely no idea. So for that reason, I think it's probably wise just to lock some profit in. And that's exactly what I've done by moving my stop from where it was, which was up here somewhere. If we entered on that bar, I think we're above the swings here. I'm not sure. Might have been a bit wider, but we've certainly moved it a substantial amount and locked some more profit in should it go the other way. Helen, Jeff, Thursday trades Euro Aussie M30, Euro Dollar H4, and Aussie Yen M30. Okay, yep, we'll go through those. Given that they are Euro Aussie. Okay, we'll go through Euro Aussie. So what are we doing with Euro Dollar? With Dollar Yen. Well, same thing. We really can't do anything here because we don't know what direction the market is looking at. The one thing I would say is this has got a box range look about it as well. If you can see that, I'll put it on the chart just so you can see it a little clearer. So a couple of equal highs up here, and definitely if I take it back this way, a couple of equal lows. Bang on the weekly pivot of 2 weeks ago, and bang on the monthly pivot down here at the bottom. So this is why I am of the opinion that we are going into consolidation. I think we're going to hang in here for a fair bit, and I'll look to trade that as such. At the moment, what I'm seeing, the last touch was on the bottom, pretty much on the monthly pivot as a double bottom, if you like, and higher lows. Equal highs, that's where it gets messy in here. You know, it's just really, really difficult to call what's going to happen next. So that's why I just want to put some money in the bank. And if we do go up here, that would have taken my stop loss probably or gone very, very close to it. And I don't want that to happen because it's hard earned, this money at the moment, and I don't want to give it back. Greedy little bugger, aren't I? So Helen, I'll talk about these others. Aussie first. You can see it's exactly the same. You can see when the daily pivot and the weekly pivot come together, price is going to stay in that vicinity as well. If you want to put a structure on the chart, then there's definitely a pennant sitting through here. Equal triangle, call it whatever you want. But that's probably telling you with those two scenarios, pivots close together inside a very, very tight triangle. No, there's really guesswork involved here. If you want to have a real good punt at things, then go to the bigger time frames and see exactly where we are. Higher high, higher low, higher high, potential higher low. To me, it's at a non-level. Sorry about all these lines on the charts. Let's get rid of them. So AKA no man's land. I can see and I can see why if you're a trend trader, you would be interested in probably trading this long. And I get that. But on the other hand, what I see is that level there, which has been support not that long ago. And really, it is the first resistance level since we crashed. So as you've seen, the market reacted off that. Put in a big bearish engulfing bar. To me, this is a lower high potential on that engulfing bar. So I'm expecting this to retrace and potentially down to monthly pivot. So that's kind of where I'm at on the Aussie at the moment. I'm a bull, don't get me wrong. But if I can get down to here, I'd like to see a sell-off so I can get a better price on Aussie dollar. I think that's where I'm at. And again, off this resistance level, pivots where they are, I think we're likely to go into a consolidation area. Let me get rid of that as well. It's now been broken. Not in anything on the pound. We know about that. Dollar CAD, I'm not in. So I'll have a look at these two that Helen was talking about that we got into on Thursday. Was it Thursday? I do believe so. Euro Aussie was one. Okay, Euro Aussie was very interesting, as was Aussie Yen, and we struggled with this on Thursday. And here's how it all worked out. We found two entries, and one was Stay where you are. One was this one. So clear false break of the, not only the trade line, but the top of the range. So we got broke, came into consolidation, back underneath, retest, classic slingshot scenario, place your short underneath that bar and get your stop loss up here somewhere. Now, we've been saying for weeks and weeks that you need to think about your stop losses and get them a little bit wider than the strategy would otherwise dictate. And the strategy otherwise dictates, or normally dictates, that I put my stop loss above this candle. I did exactly that. And I took a TP1 at 10 pips. I think we went, which was just on these lows here. I think we got 10.2 pips or something like that. And then price just went whoosh and took out the trailing stop, which of course gave us a break-even trade if you trade the right way. Then, not long thereafter, we had a little different trade line that set up like this. So forget this trade line now. We had exactly the same situation where we had break, retest. In fact, we had 3 of these in a row. That's the one there I think I traded yesterday. But same thing, exactly the same entry. So approach the trade line, pull back away from it, approach the trade line, which was new down here, pull back away from it, entry under there. And I woke up this time. I thought, okay, what we really need to do here is get our stops somewhere safer. So here's a safer place. Here's a safer place. Here's the safest place. And that's exactly where I put my stop loss up here, I believe. So whilst my reward on this trade is dramatically reduced by the stop loss that I took being very much wider, we had no problem. Now, had you got taken in here, you wouldn't have had a problem anyway because it didn't come back. But if it had, like the first one did, then we would have been out of the money. And if you hadn't managed to stay with this, and this is one of the hardest things to do, especially if you didn't take first profit here and actually took a loss, then you've got to jump back on the horse and try again. But the setup never moved. It never went away. And essentially we're back into the range, lower high, another lower high, got to trade it. So that's how we got into Euro Aussie, and we are still in that trade, as you can see. My stops are now just above entry. I don't know why I put them there. Why have I moved that there? Oh, I wanted to get above this swing, I suppose. So profits have been taken on this. Maybe I should even get my stops down to here above the weekly pivot. But that's how we did that one. Helen, if that's the one you were talking about, happy days. Now, the one that we were sad about was Aussie Yen. And Aussie Yen was very much in the same category, very much in the same boat. And I've still got my trade line there. So the first scenario was this one. We actually traded this bar here. And when we traded this bar here, what did we do? We put our stop loss. I can't remember where we put our stop loss, to be honest. I'd have to go back and have a look at the record. But even if we put it there, which is where it would normally go, we got stopped out on this. And we got a bad entry, then bang, got stopped out. But if we'd used our noggin, our brain cells, those things that I keep killing every weekend, we would have put our stop loss in a much safer place. Some would say here, some would say here. I would say that's the weekly pivot, get your stop loss under there. And had I done that, then I wouldn't have had to think about getting in a second time. Thought a lot about getting in a second time, but that didn't happen. I didn't find the exact setup that I wanted. But as I said at the time, there are a lot of shots over the bow here. There's a lot of things going on that suggest that this will go. And unfortunately, it just didn't set up for me properly. And I didn't get into that breakout. But there's your trade right there. Bang. Look at that. exactly the same scenario with a tiny, tiny candle, but you couldn't trade the candle. You've got to get your stop into a far more sensible position. And that's the whole thing. That's the whole, and there's a great lesson there to actually be trading smaller time frames in this and my strategy in this environment. You've just got to get those stops a bit wider. And when you do, you get the rewards. So you'd still be in that trade if you played it smart, not like me. I didn't play it smart. I traded the strategy rather than the sensibility, and that's the price that you pay. Fortunately, because the market is as such, no great risk was taken. So, you know, we've only given back a tiny amount compared to what we've taken out of the market in the last little bit. Helen, you got stopped out on both. So you didn't take profit on Euro Aussie, where I'm pretty sure I said take profit at 10 pips, which is where I did. Maybe different brokers, I don't know, but it was very, very tight on it. I agree with that 100%. And I got stopped out on this one. Yes, very good learning experience. That's what I say. It was a very good lesson in there for myself included, just underlining exactly what I have been saying and failed to do on that occasion. It's the only one, or the only two that I failed to do that on, but I got away with Euro Aussie and I didn't get away with Aussie yen. Should have got back into this, but couldn't find a way. Euro Aussie stop loss 172.49. At the moment, yes, that's where I've got my stop loss by the look of it. No, I've got my stop loss at 172.56. 172.49 looks like the entry. Yeah, 172.50 was the entry. So that's probably where my stop loss should be at the moment, or even down here. I'll let you know. I'll have a good look at what the charts are telling me. And if need be, I'll bring it down to 170, 170 or something like that. Okay, think I've done with the questions at this point. Let me go back and have a look and see. No trigger here. Again, going back to the point I was making before, on these majors, we have had a structural breakdown on US dollar CAD. That's a bit bullish for mine. Broken above the pivots, come back and retested the whole damn lot of them. But look, daily pivot, weekly pivot, monthly pivot, again in picnic formation. You can throw a blanket over the three of them. That to me suggests that we're not going too far anytime soon. Let me rearrange this structure. If it actually exists anymore, maybe we may be able to work with it. Yeah, I'm not that fussed. Maybe drop it a bit lower. Yeah, it's not the worst I've seen, I suppose, but it certainly gives us a good view of what's going on. All right, we'll keep that. So a little bit of a structural change there on dollar CAD. Because we're at the top of that range and we're in a complete mess in terms of no man's land again, where the pivots have come together and look like going to stay there for a bit. And the breakout of that former structure and a retest of the pivots is really confusing. So I can make a case for the long here as a bounce. I can make a case for the short because we've come back inside and put in a lower high, but we're in a terrible place to trade. We've got to get out of here. We've got to get below these pivots and retest them, or above the structure and pivots and retest them from the other side. So not interested, just not interested. Euro Aussie, change of bias. Okay, let me go back to that. Lewis, sure. All right, bigger picture. We'll have a look at that first. If I can get my pointer back. All right, bigger picture is telling me that, and I said this last week, that we've gone into consolidation here. at this level where we expect to have a little bit of a pause. But that doesn't really change my longer term bias. What I'm waiting for is probably a structure like the weekly pivot, for instance, that we're at now, and we'll go into a little bit tighter, like the weekly pivot or the top of the range that we've got, to tell me what happens next. At this point, I really can't say. What I can say is that we are at the bottom of the range, yes, and potentially looking at the top of it, no question. But we've also got the weekly pivot in the range, so I don't see an entry here. But to answer your question, a change of bias, short term, yes, medium to long term, no. And I know that's confusing at times, but it's absolutely relevant and the truth. I can't tell you any more than that. So, and I guess where you're going with this is, am I willing to trade it long? Absolutely. Absolutely willing to trade it long. But I don't see anything here that suggests that I should. We've had the potential bounce, but we haven't had a bounce, if you understand what I'm saying. We've actually gone sideways and nowhere else. Pivots have tightened up again. This, to me, is really shouting, the market's shouting at me that it doesn't want to go anywhere right now. It's on hold for whatever reason. The market is just not going anywhere anytime soon. So really what I'd like to see, Lewis, is a break here, a break to the low side, then come back in, then retest and give us a genuine higher low. I don't see any higher lows in here. I just see a mess. Maybe on the
sorry, mate.
Yeah,
I was just going to say, there's a trade here on the FTSE that we could put an order in.
Okay, back to you, bud.
If anybody's interested, we are looking at the short again. Just going to keep with that, and yeah, I can do that. I can do that, and I can do that. Right, this is what's happened so far in the first few minutes. Now the 15-minute chart is 15-minute bar is attempting to hold on to the weekly pivot here, and I suspect it may well hold on to the weekly pivot. Now the short is just going to be slightly beyond the daily pivot here on the so around about 57.90, I guess. 57.90. You might see enough weakness in here to have to do this manually eventually. Now let me bring it onto your chart. I'm not going to place the order on this on the UK 100. I'm going to place it on the futures, but I'll walk you through it. So it's going to be slightly beyond the weekly pivot. So 58.06 is where now the daily pivot might just reject it enough, and that isn't a bad area. But if this bar looks like a fairly decent buying bar, then we can start to consider where it might actually start to come back up to, and I think it might go beyond the daily pivot and then bring us back down again. These pivots may not act as much of a genuine area for it could get a bit sloppy up here. The pivots are getting pretty tight in this area as well, and they're in a good order. They're not in bad order at all, and it's not that we're not looking for a potential long if the market holds these points, but not today. The barometers are suggesting that we are around about 30 to 40% of stocks in positive territory, leaving 60% to the downside. So really, I think I'd like to put an order in around about the 58. Let's put it in at 58.05. So just to walk you through it, there's your new order window there. You're going to put your account size. I think you guys might even be on 0.02 lots, some of you, so we can put that in. Their pending order, it's a sell limit, and it's going to be 58.06. Sorry, what did I say? 58.05. 58.05. Why is that not? Stop is going to be at the high of this point here, so at 58.32. Oh, I'll tell you what. You can't put in 0.02 lots, can you? Let's see what we can put in. 0.2. No, I think the least you can do is 1. Not sure if people's account size it will allow, but the least you can put in is 1. So they're your levels there. You stop at 58.32. The sell limit is going to be at price 58.05. Make sure that's right. Yeah, 32, 58.05. Put the least amount in that you can, and then place that order for that position just to come up, just to pop up a little bit here, and then we're looking for further downside. And you can really trade this like a you can trade this just as a day trade if you like, rather than a longer term position. If you can only put 1 in, if you can put 2 in, then you can take half off, and I would take half off around about this monthly pivot level at 57.54. So you're looking for around about 50 pips to the downside with around about a 25 pip stop loss. So you're looking for about a 2 to 1 here. Okay, mate. Sorry about that. Just wanted to get you guys the opportunity to trade this if it came about. Sell signals are there. They are a shade weak, but they are there. Now we got this trend line break here. You see, and you can see that the price is now under that trend line. So I think putting it above the trend line would be a pretty good place. And it's got this area to get through, this area to get through, and also the horizontal area to get through. So it's got quite a few points here. That horizontal line is actually at 58.08, so you could shift it up a little bit. You could maybe put it at 58.07 just to make sure that the entry is triggered. So 50, go for 58.07. That will improve the risk reward ratio slightly as well to around about 23 to 54. So, and it should be a good 2 to 1 trade if that comes into play. And we got to make up some of the losses from this trade last week. So that would put us up by 1% or certainly 1% of risk anyway. It's a difficult market today, though, mate. Pretty choppy, and I don't see a lot out there for news and data.
Mate, as I said, I think the market is in a bit of a halt for whatever reason. Well, halt's a bad word to use in markets, but it's in a pause,
Yes.
and I'm not sure why.
Yes.
But technically, I'm absolutely seeing that. I'm seeing potential for this to go sideways for an extended period now, and that's cool.
Yeah, do you know what, mate? I wouldn't be surprised if we're just hitting a bit of a pause because we've got earnings season. I wonder whether earnings season might well be the elephant in the room for a little while. Right, some of you will be triggered in to that trade. So let's see what happens here, and let's see if it can fail at this area and actually provide some downside from this particular point. As I say, your target is going to be the weekly pivot, the monthly pivot. Now, if you're able to take half of the monthly pivot and then trail the rest. If it gets in, if it comes down here, of course, if you get down to the monthly pivot, then you can look at then starting to put your stop at break even. It'll be a nice distance away. Put your stop at break even, and then just see if you can actually trade it all the way down. Because realistically, we are looking for a much longer term sweep, and maybe it starts here. I don't know. I wouldn't be surprised really before we do start a longer term sweep to see this high up here one more time. But just on the day, on today's price action, it does suggest that we are likely to get some weakness in. And it might hold here and then start turning around again, get that point, and then we can really start looking for some genuine longer term downside. But if you can trade half, you can put on if you can double up to get at least 2 positions on, then you can take half off at the monthly pivot, trail the rest of it down and see what happens. And if it comes and stops you out, no big deal. You still break even from the trade last week, and maybe even better because this is a really nice tight stop as well. So it should be pretty good. So we'll see what goes on there. And as I say, if the descent starts from here, then we can try and get another position in, take half off there, and try and add that half a little bit later on. Certainly if it breaks through the trend line down there, that's going to look even better. That does, looking at this trend line, it is suggesting that the monthly pivot has got a really good shout of holding up. There is a trend line there now, so massive, and you can see horizontal level, There's some horizontal lines of support here. There's the monthly pivot. There's the trend line. Pretty good shout of holding up. So the likelihood that we do break that level today, considering the lack of catalyst, is slim. It's got to be said, it's slim. So you're gonna have to make your own choice there. Do you close the whole trade? Do you take half and hope it doesn't take you out before maybe turning around again, or do you just take the majority of your position off? I'm going to leave that to you guys, because I'm going to be managing it differently as I manage all of the trades that I take slightly differently, because my account is different. My account size is different, and the way I'll view the market is different. What I'm trying to give you guys is the safest way. Now, I don't necessarily always trade with what would be conventional safety. My what's the word? The way I'll trade safely is maybe just a little bit more complicated with hedging, but hedging's a whole nother school of trading that is not really we don't really have the time to kind of cover that particular way to do it, and to a degree it takes two different strategies. You're trading short-term strategy and a longer-term strategy, so it's got some layers to it, which is a bit tricky. So let's just do this the conventional way. Just as good. It just means that you will take the odd loss on the way through, as we had to down here. So we're going to put our stop in here and see what it goes. But hopefully you guys are in that market now anyway. It's on the move, but there's still no guarantee that it's going to work out the way we want it to. But let's see how this develops through the day. But nice to get an early trade in the market, mate, for the week, and it'd be great to get a winner here too.
Hell yeah. Guys, there appears to be, and sorry, I didn't notice these earlier, but thought everyone was sorted. How did you guys get in here if not by the link? And I use that same link to monitor YouTube, and I had to refresh my browser, which what I've now posted in the Telegram group. But how did you guys get in here if not by that link? Something's really weird going on whilst you're answering that question. And PL, yeah, that's not good. Okay, thanks. Don't you say, the link on Telegram is not right? Well, yeah, I use that link. And as I said, after I refreshed my chart, it was okay. Well, not my chart, but my browser, it was okay. Euro, dollar, euro, you've been through those. Aussie yen took off like a rocket. Aussie yen, yep. How do we gauge how much retracement is adequate? What a good question. Helen, I think the answer to your question is anywhere he likes, or she likes, if that's the case. I think I've heard that one before. If I'm not right, then tell me the answer. Helen's question was, where does a 500-pound gorilla sit?
Where does it what, sorry?
Where does a 500-pound gorilla sit?
Oh.
And my answer is anywhere he likes.
Is that Donald Trump? Does that relate to Donald Trump?
Well, I don't know. But this question, from LT, how do we gauge how much retracement is adequate? Wow, what a great question. That's going to be very individually answered, I'm sure. But the way I would answer that is I'm going to use a level, whether that be a horizontal level, whether it be a pivot, whether it be a Fibonacci retracement, whether it be a trade line, a trend line, whatever it is. You've got to believe in something, right? You've got to believe in a level. And if that retracement level is adequate for you, then that's where you start looking for entries. Now, I think Ash and I have been over this many times before. That first retracement level that you choose may not be the one. And for that reason, you would want to start entering at reduced risk, right? And then if you scale into the trade, so you'll get second opportunities to get into that trade. So to answer your question, that's how I would answer your question, LT. How about you, Ash?
Yeah, well, do you know what, the way I would put it, LT, is the point that you find the most confluence Because if we're trying to find, and this is really my whole approach to trading, is trying to find the areas that most people will sit at, because not everybody trades the same way. But if we can get a group of effectively, it's almost a group of strategies, but certainly a group of price points that sit on the market, then we know that more strategies will be kicking in at those particular points than anywhere else. So what I would like to do, what I like to do, is have a look at the potential level. Now, I'm just going to explain that, because in Fibonacci terms, probably the most common maybe retracement in a trend is the 38 retracement, 38% retracement. That seems to be, if it comes back 38%, you've probably got a nice sweeping trend. But really, the 50 and the 61 have to be taken into account as well. So 38.268. 61.8, sorry, have to be taken into account as well. So if we bring up like this, the trade that we're currently in, and it's on off a 15-minute chart. So what we've got here is a level of support, and then a break. Now, the first thing that I would want to do is say, where did price break from? Because we're not trying to, we don't know where the break's going to happen. If we try to trade, if this is our support area and we put our entry below this point here, because it would be breaking support and changing direction, then what we have is a false break, and then it goes back up again. So we lose our money. Or, well, depending on where your stops are, of course, but we certainly wouldn't have had so much confidence. Whereas if we wait for the break and the retest of where it came from, that's what I like. Where did it come from? Then we get this point here. Now, it could have been that the retracement was at that low, which is near the daily pivot. So yes, you got some confluence there. Okay, so that would qualify certainly. So that one at the minute would trump this one, because there's only the horizontal level there, but you could say that's a low plus the daily pivot. But if we bring in some fibs, I mean, this low here is nowhere near as good a line as this one. So in horizontal terms, this would trump this one, because we got 1, 2 and a break here. So we got 3 touches here, and maybe arguably a little area over here. So it's a really good point just on a horizontal level. Can we get any confluence on the fibs? Well, let's have a look. So if we bring in a fib here and take the trend from the upper line to the lower line, what we then get is right on the 61.8 retracement. 50%, yes, fine, okay. I would certainly accept that, except for the fact that the 50% is slightly above the daily pivot, and it's right on that level. So you do have a bit of confluence there, but this area here is really potentially providing, that's going to be providing a little bit more confluence to us. So I've got now two areas there, which would suggest that if it came down here, there would at least be some weakness. Now, whether we get a continuation of trend is the game. That's the game we're playing. We don't know whether we're going to get some further downside here. But what I do know is that there is going to be people that are interested at this level. And if we bring up a 5-minute chart, then what we are going to see is, as it came up, didn't quite touch it actually, but it did provide a little bit of weakness. But look what's happening here. There are some orders. Can you guys see? There are orders coming in here to sell this off. Now, I don't know if it's going to hold or not. I haven't got a clue. But I like that area, which is why the order went in there. Now, if the area doesn't hold, maybe we're looking up here. And at this particular point, then we are saying this is why we put our stops in an area which we deem to be safe. Because what I would suggest is, if we get through here, the structure is going to start being in a little bit of trouble. However, there is one more opportunity up at this particular point. It almost creates some sort of double top-ish of this cluster, and there's a trend line there. So there's one more level that could save me. But if it gets through there, then at that point, I think what I was initially looking at, which was a trend to the downside, is going to be under stress. Doesn't mean it can't fail here, but that's not what I'm looking at. I'm looking at a trend, not to be bashing into ranges, you know. And up here, we're going to be starting to hit a range, and yes, it could fail there, but it wouldn't surprise me even at that level to maybe get through. So look what's happened now. We've come up to the 61.8% retracement of the trend to the downside. We've come up to the horizontal level, and now really we've got a little bit of confirmation that there are some sell orders sitting here. You know, it's failed to get above that point, so I'm feeling better about this level right now. You know, could still fail, but as I say, that's the game. What we're trying to do is ascertain where can it turn, and what's the best possible price if it was going to turn that I can get to. Well, that's the best price in a downtrend. You know, pretty much. All right, we could say here, I guess, but I'd still be in there. You know, I'm going to lose out on 10 pips or so, but that's the best possible price. That's the first best price, let's say. That's the second price it could get to. And at least this gets me in. You know, there's no guarantee we get up here if this trend is to the downside. So I'd prefer to wait and see if it can fail here, and if it does, we should get down to our monthly pivot. But as I say, we'll see what gives at that particular point. So I hope that answers your question as well. I'm just looking for confluence. You know, what confluence do I potentially have?
Yep. And the more
5807. Yeah, 5807, 5808. 5807 is fine. Yeah, 5807, Brian, would be great. And 2 positions if you can afford it on your account. If you can only afford 1, then just take your profit at the monthly pivot. Your stop is going to be above these highs at 5832. Sorry, mate, you were saying something there as well.
Yes, you're talking about confluences, and I said the more the merrier.
Yes.
The more that stack up, it's like everything else, isn't it? With trading, you know, the more layers you can stack on, the more likely it is to occur.
Yes, exactly, and that's what we're trying to do. We're trying to get the information which would suggest turning points, because we are speculating, of course. LT, you're more than welcome. Dollar CAD, is it a potential buy? Let's have a look. Tell you what, I do quite like, Jeff, and this is going to go well against the grain, but I quite like the Aussie CAD for a short.
Well, like I said from the outset, I can make a case for consolidation, short and long. And when I'm in that position, then the very best thing to do is nothing. But and I'm going to say yes to can there be a long? I'm going to say yes, can there be a short? And I'm also going to say my preferred, or not preferred, but what I see more than likely is consolidation.
Yeah.
So, and as I say, when I'm in that position, it's a very easy decision for me. SFA.
Yes. Well, let's have a look at both of them. FTSE's hitting around about 50% currently, positive and negative. So we're just a little bit in a decision mode, which is preferable out of the FTSE or the UK 100. It just depends on what your broker offers you. I've got UK 100 on my broker. I've got UK 100 and FT 100. You see up here, FT 100, and the FT 100 is the futures. Now, if you've got the opportunity to trade the futures, then I would trade the futures. And the reason I would trade the futures is that even though the spread on the futures is 2 pips, and I think it's only 1 on, what is it on the UK 100? There's only 1 pip on the UK 100, maybe even 1.5. So the UK 100 on the face of it looks slightly cheaper, but with the futures, you don't pay swaps. So when you're in, you're in, and you know you're that's my cost. That's the cost of the whole trade. Those 2 pips with the UK 100. If I'm holding it for, I don't know, a few days, a few weeks, a few months, then it's going to start racking up costs. And for that reason, I would suggest that the futures is a better market to trade. So I hope that answers that question. But if your broker only offers UK 100, then that's what you gotta get into. Yeah, so you gotta trade the UK 100. I don't think Fusion is the most expensive. By the way, I think their swaps are okay, but you do pay swaps, which is, you know, that just cuts into your profit line. No, there was another question. Oh yeah, it was something about the dollar CAD, wasn't it? Where's that? Dollar CAD. Somebody asked. Now, what was it? A buy or a sell?
It was a buy.
It was a buy. Buy on dollar CAD. Okay. Not for me. I have to say, you know, when I look at this dollar CAD, where are you? There you are. When I look at this dollar CAD, I kind of see it in a bit of a potentially weak area. I'm a little bit. I'm similar with the dollar CAD as I am with the Aussie CAD in some respects. I quite like the CAD. I know it sounds a bit stupid because oil is just getting obliterated and continues to do so.
Wow, isn't it? Yeah.
Yeah, it's absolutely terrible right now. But I quite like the potential for some weakness, strength in the CAD.
Where I'd want to thing, you see, mate. Where was the demand?
Yeah. Completely agree. Completely agree. It's not there. What I would want to see before I traded this, though, is now I wouldn't be going long. I don't particularly like the long. I am seeing some dollar strength this morning, and I do appreciate actually that this is a basing out. So on the short term, I could see this dollar CAD strengthening. Absolutely, you know, the pivots actually look fairly similar to where the FTSE pivots go. But what I kind of prefer to see is this area here broken down. If we break down this and we get some sort of break and retest, so this level is let's call it 1.4 with all the zeros. So if it breaks down the 1.40 and comes back and retest, I'd be much more interested in trading this. But in saying that, there is probably a trend line down here which hasn't broken through. Look at the weakness that's coming in with this 4-hour bar right now. So that really, if I bring this onto MT4 speak instead and use the lines on MT4, let's put this line in place and see what it looks like on the shorter term time frames. I mean, it does look all right, doesn't it? See, we're talking about confluence. There's some confluence there with the dollar CAD and the trend line. Sorry, with the daily pivot and the trend line. So yeah, it could come down here and switch around. And I suppose if you were taking short-term a short-term position, then yeah, that wouldn't be the worst one in the world as it goes. It looks like it has broken through there. But I don't like it, and I'll tell you what it is I don't really like about it is the longer term price and the longer term price action. So looking at this on the daily, this is suggesting to me that I've got a low, a lower high, a lower low, and a lower high. So that's why I'd be more interested in the downside in the dollar CAD. I think the longer term look at this is still a little bit weak. May well have turned around possibly at this point here. So I could be persuaded on this. My arm could be bent on this, but I think I would be more inclined right now to wait and see if I can get what I'd want to see, which is a break of the 4-hour. And if that happens, then we'd be looking at downside. And I think probably quite a lot of downside. It hasn't tested these areas down here. And I'd be more comfortable if it had done, looking for more upside. Looks a bit extended up here. That's the other thing. Would you be sitting on that, Jeff?
Would I be sitting on what?
On the dollar CAD? Would you be waiting on this for maybe some more information?
Oh, look, when you're done, I'll go back to my chart and I'll show you what I think.
There you go, buddy.
Are you done? Okay.
Yeah.
And I also want to readdress this euro Aussie thing, because it disturbing me, Helen, that you lost on that first trade. You shouldn't have. And I'll go through that a bit. But dollar CAD, I've got, what chart have I got up? There, that one. So we spoke about this earlier, and this is the trend line I think that you had on as well, Ash, which is showing me a strong case for a bounce off the monthly pivot. But what am I going to gain here before I hit resistance? I'm on a 4-hour chart, right? What am I going to gain before I hit resistance as trading that as a bounce? Well, that's what I gained. I gained till the daily pivot and got hammered. So I think this is likely to remain the case for some time. And I say that because of the pivot formation. The pivot formation for me is exactly the same as it is in here, right? Where you see the two pivots daily and weekly come together and you go into a period of consolidation for another few days. That's exactly what I'm seeing happening here. So it wouldn't surprise me in the least if that is to remain the case. And you can see what happens when pivots come together. In particular, you know, things like dollar CAD, Aussie CAD, because in particular Aussie CAD, because they're driven by commodities, right? So when the pivots come together, it's telling you, or it's telling me, that price has gone into consolidation already, otherwise they wouldn't be together, and is likely to remain that way for some time, in particular if we're in the middle of nowhere. So we're not at the top, we're not at the bottom, we're absolutely in the middle of nowhere, and that's where we stay. We're not as dramatically in the middle of nowhere here because we have come off the top and we're very near the top of that range. But I just can't trade here because I can make a case for the short now. We've broken the monthly pivot and we've retested it, and we've retested the 3 pivots. So there's a strong case for this to go short. But there's also a case for it to go long, having failed beneath the monthly pivot, and now we're back above it. So you see what I mean? I can make a case for either. But until a structure breaks down, like this structure now is being bounded, if you like, by the top of this new range. Remember, we changed this range earlier in the show. So until we break clear of here, I can't go long. And until we break clear of here, I can't go short. So it's pretty much a non-event for me. So yes, I'm on the sidelines, mate, on that. But if I can just quickly go back to Euro Aussie, Helen, I want to make this perfectly clear for you. And I know that's difficult if you haven't done my my trading strategy course, because you don't know exactly how I trade, but I'm going to give you a little insight into that right now. When I say to you, you have to take profit here, and I don't say you should take profit, I say you have to take profit here, there's a very good reason for that, because it's part of the strategy. Now, as you rightly said, the stop loss was at 172.90, if I recall, and the entry was underneath this bar here on Euro Aussie at 172.63. So the stop loss at 90 was 27 pips or thereabouts. Yep, 28 pips maybe. Now, there's a formula that I use that my first take profit is generally between 1/3 and 1/2 of the risk that I've got on the table. And if that coincides with a support level, in the case of going short, then I must take the profit before that level's hit. So in this case, the potential profit at that level was, I think, 11 pips or something like that. Pretty much where that white line is. In fact, very much where, in fact, that is it. That's the level. So we can't go through that level. We can't go through that level by my strategy without taking profit. So with spreads taken out, I think I took 10 pips, not 11. And that's where I took my profit. Remarkably, that's where the second entry was. Well, not remarkably. Is it remarkable or is it not remarkable? It's not remarkable. These levels are absolutely preordained. They're there for a reason. The market stopped there, and it stopped there again, and then it hammered it. Then it retested it. Then it retested it again. You can't tell me that level's not being noticed by the market. Hell yes. Absolutely hell yes. So that's why I say what I say. I don't say please take profit. I don't say you should take profit. You have to take profit. If you're going to trade my strategy, you have to take profit where I tell you. And that was that level right there. And it went through it by just the spread. So we only just got it. That's why it was safe, because we then move our entry 10 pips, in my case, 10 pips, because that's what I took off from entry, take half off the table. And therefore, if it goes beyond your stops, it's then a break-even trade. That's the free trade. And then, of course, the second one, well, you saw what happened in the second one, because that, and as I said before, that's the hardest part. If you do get stopped out, then you've got to jump back on the horse straight away. And the market does this, you know, it just tests you to the limit. And when you're starting to trade, the hardest thing once you've had a loss is to jump back on that horse. But if you're seeing the trade, you've got to take it. So look, I hope that helps.
Yeah, I couldn't agree more, mate. And this is the thing, you know, I think when you are, certainly when you're trying to get into a position, I mean, you know, to take the FTSE 100, good example right now. It's kind of gone beyond the entry. I'm just going to share this screen, Jeff, if you don't mind.
Sure, mate.
Actually, we better get out of here pretty soon.
Oh,
yeah. So
where does the time go?
I know it's quick, isn't it? What we at now? Oh, it's only just gone 9. That's okay. So this is now gone beyond the entry, and this is what trading is about. You know, we have to accept that there's always a chance that no matter what you do, you lose money. Now that hasn't gone through the level, so we're okay right now. But no matter what you do, you're going to lose money. However, if we are aiming from this point down to this point, and it is a better than break even trade, effectively, then you know, with a chance of it actually continuing, then as Jeff says, we've got to take it. And you know, if this trade ends up losing, it's not a big deal. And I think you almost have to put in your basket, right? If I'm going to be trading for a month or even a week, let's say for each week, we're going to probably try and enter 1, maximum 2 trades a day. So you know, and there might be some days that we don't trade. So on an average week, we're probably going to be taking around about 7 trades. Now, out of those 7 trades, if we can hit a few 2-to-1s, then let's say we're going to have a group of them where, you know, we're going to lose. So we want to win more than we lose. So out of 7 trades, let's say we're going to aim to win at least 4 of them and potentially lose 3 of them. So if we're losing 3 at 1%, 3% gone. If we're winning 4 at 2% and higher, then we've got 8% in the bank. So we should still end up each week like looking at you know, around about the 5%. But let's go on that. You know, we lost 1 down here at the end of last week on the FTSE. And the scaling in aspect would have meant, you know, still only losing the 1% there. This one might end up being a loser as well. We'll check it out in the US session later on. But if this one ends up being a loser, that's 2. Now, we can only really sort of stomach 1 more, but let's be prepared each week to be losing at least 3 out of 7. You know, we want to get more winners than we lose, and also for those winners to be multiples of the risk. But let's be prepared. You know, before we start the week, let's tell ourselves, look, the likelihood is I'm going to lose. You know, if I'm going to say I'm going to be risking, let's go for 0.5%, or make the decision on what you're prepared to be risking each week. Well, am I prepared to lose 3% this week? If I'm not, then am I prepared to lose 1.5%? If I'm not, am I prepared to lose 0.75%? And that can really dictate how much you are willing to put on per trade as well. So just be prepared to lose, slightly less than you win, but making sure that when you win the trades that they go multiple times. And I think you'll be in okay shape. You've got to get your head in that space that losses will just happen. They are going to happen, and we can't get upset about them. We're going to be prepared for them to happen because we're looking for net profit and not worrying about every single trade winning. It'd be great if it did, but it's just not reality. Because as Jeff says, the market is here to test us. But if we are every week prepared in our mind that we will accept some losses, then we're okay. We're not in bad shape. So yeah, just to add to that, mate. I think
Yeah,
that's
cheers, mate.
Fair point. Yes,
my strategy, of course, won't stand for that on the 30-minute chart. We've got to get more winners than probably 75%. If we don't get on the 30-minute only, 4-hour and daily, completely different. But if you're trading the 30-minute charts with me, you should, and this is the whole crucial thing is, and why I say to you, you've got to take that TP1, because that's where our win percentage comes from the TP1. It cruels us as far as reward's concerned. It really messes around with our reward to risk. But we're not, the strategy calls for 1.5 to 2 to 1, full stop, no more than that, on each 30-minute trade. And if we get 1.5 to 1, we should be really happy. Because if you keep getting 1.5 to 1, 80% of the time, you're doing okay.
Yeah. Yeah.
But that's a completely different strategy to Ashes, right? So I don't want to confuse you in any way, shape or form, but you can't overlap, if you like, different strategies, because that just doesn't work. There's rules for some and there's rules for others. We will continue to answer those questions, of course, that must be going around in your head as to, oh, gee, hang on a minute. This guy's saying one thing and this guy's saying completely well, not necessarily the opposite, but something completely different. And it's because we are doing different things, entirely different things. I won't bang on about that too much, but of one thing, well, on many things we're in agreement, and this is one of them, what Ash has just been through there.
Yeah.
No movement, mate. For me, it's all very quiet on the Western
All right,
front.
fantastic. Well, we're still alive in the FTSE. Let's see how this works out when we open up the US session later on, and see if there's some more opportunities later on. The US is a little bit weaker today, actually. As that opens up, so there may well be an opportunity today in that session rather than what we've got here. Yeah, looks okay for some downside the US session, but we'll see. We'll see what happens as we go, mate, and we will discuss some of the other stuff. Bad long. Great, Helen. Great. Okay, so let us close up then. We'll be back same trade time, same trade channel tomorrow morning, but we will also see some of you in the US session and see if we can make some money by the end of today. Let's see how this all pans out.
And there's bound to be something that'll keep me awake tonight as well, and I'll share that with you in the US
yeah,
session.
gosh, I'm going to get to. I've got an answer for the why there's no
G
in refrigerator. Yeah, I'll give you that later on.
Also, of course, we can play music as of tonight.
Oh, so, we can, yeah.
Yeah, if anybody has subscribed to us in the US session and want to submit some music ideas, then happy days.
Oh,
we look forward to that.
Yeah. I'm gonna play a US Open song, mate.
US Open. Awesome.
Yeah, for the US Open. It's going to be pretty hardcore. Well, it's not hardcore, but it'd be pretty noisy.
Okay, I'll turn
my favourite band. They're going to play my favourite band ever.
Okay, I can't wait.
Amazing. All right, fantastic. We'll have some fun later on then, guys. We'll see some of you there. If you go, Kuma's asking for the links for the US session. Do we have those, Jeff?
Links to the session itself,
I guess so.
or the link to the subscription. The link to the subscription should be in the Telegram channel, but it also should.
Oh, great. Oh, okay. So he's already subscribed. He's got no links.
Okay, I'll get James onto that.
I haven't got a
And
link
if
either. Can you get James onto it for me as well?
yeah, okay, too easy.
Uh,
Zoom links. We need some Zoom links. Okie doke. There's no YouTube, of course. That'll all come through Zoom. So, all right, I'll get onto that right now.
Good man. All right, buddy. All right, guys. For the rest of you, we see you same time, same trade channel tomorrow at 5 to 8.
That's today. Don't be late. See you guys.